Doom, 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 doom. Hey guys, morning. Level 2 here. Right, we going on start. Be streaming. It is now 9:22 a.m. on the East Coast. We 8 minutes before the market open. We in one position already on oil. I open a Twitter account. I don't know how to use it that well as yet. Um, so I posted where we were looking to sell in the market, where the actual entry was, where the stops located, and posted the updated where we got profits out on single. So need to just make sure and update this, right? So more or less we are looking for that. I put that on the reply. Nope. Cancel that. Where entry was, where take profit was. On first take profits we're looking at 53 flat, and let's see how this build was built. We were looking for simple SNR to get in kill position retest before the open, have our stops beyond 71. It was the opening position. We were looking for push trade downside on the open, test and push trade downside on the open. Just a liquidity punch we were looking for, and we roll the stops to 65. So we got up to 61 on the open and tested, and you can see exactly just a structure play. We're looking for the mean average here. We may exit depending on what the POC telling us, which is the active POC for this swing. If you want to trade off the overnights, it would be you look for the pit close. How we look for the pit close. You look at where your POC located if you want to actually get out of the market at the most opportune time. We're looking at midpoint between round number. So yeah, active entry should be maximum at 52.90 if you're in the trade. If you're not in the trade, and you can see we touching on VWAP. So this is the 15-minute chart. We go down to a 5-minute chart to monitor what's actually going on in the market and see what adjustments we need to make, or if we need to make any adjustments. You could, if you're in the market, this is your active TP out of it. We're looking for the fall through. We know this was the inflective point here. You can see the inflection happening here again at 52.30 to 20 area. That's the inflection point. So you can see it was active constantly. So you're looking for the clean break, and our actual TP are set here at 52.90. I just posted at 53. It's pretty wrong number for good RR.
Order filled.
Ooh, what the hell? Ugh. Why are you doing that? Why is that wrong now? Oh, crap you. Yeah, now click. This mouse is in trouble. Let's see. Profit assume this, exit this position. Send one. We end up going flat there. Thank God this is the demo. So this is the actual exit here. So that's the trade idea built on that. The exit should be here, either at 5300, 5290 for maximums. If you're in the trade, this is the inflection point. If you want to take from, based on our assumption, is look to get short at or below 5330 and look for that 5290 in the market there, and 5300 would be a level. For some reason my mouse is clicking here, so don't know why. Alright, need to check that. Hey Alan, what's up? I hope you had a good day trading yesterday. Actually open a Twitter handle. Don't know if I'll be here all of next month. So again, Alan, we was looking at was the oil level here. Just take simple trades. More simple trades are easier for us to manage. 5300s and 5230. If you're looking for the continuation and you trade, look at this 53.25 30 level for a continuation trade, and you could keep your stops close. This is the inflection point we've been looking at since last week. We're already in on our lives. Oh, where these orders come from? On our lives. So let's get to the ES before we get cracked open here. Right, you can see simple SNR again. I got stuck yesterday off that, so made a small minute. Right, sorry, don't need that. Right, this is where the rubber may need to meet the road. We have deviation levels at following levels. You can see that 61 to 63 from yesterday, that 60 to 63 from yesterday coming to play. The 58 you would have missed that unless you take that live, because you would have missed out by one tick yesterday on the sell side. I actually got in live during the day, so made a reasonable amount of cash yesterday. Right, so let's get to where our levels are. We had 5207s, 5223s. This was the 56 we were looking at, 55 to 56 we were looking at overnight. This would become an important level. At 69 to 72 level is for a test of the open. On yesterday, you can see 69 to 72 located, and this is the 1.5 for deviation for that. You could use a simple SNR for here and be looking to more or less buy off the test on the side, looking for a range trade. If we do get a breakout against us, we know we wouldn't have a lot of leverage in here. We know why that level is created. We just before the open here, so we're looking for a test of this level here. We're not trading between that 63 test of the high because it's been tested multiple times. Most likely we might get a trend to break through. So again, we have 71.72 as we call. We'll take that, and the high. So if you take the high is what we're looking at here for your opening. Now why the street opening range is different, so this would be a kill zone here. You could always bridge it. Again, this mouse is trouble. Yeah, might need to go and help out my old company. They don't have some expertise that they require. So how I'll be treating this is looking to buy two contracts, one bridging from here, one at 54. So how my setup is built, actual setup is built is like this. Buying one contract at 44s, stops right beyond here. So we taken 7 points this morning. And one contract at 41. Again, you want to make sure that your stops are at reasonable areas in the market. So this is my strategy, how I trade. This is not trade advice for anyone. For educational purposes only. This is your value area from yesterday. This is your value area so far for today. And we would have a sell off the 69. And one off 72. We call this bridging. Within our strategy, we call this bridging. Mouse is up this morning. I don't know why. Technology does not like me. Looking to keep our stops at 75. Once we get breakout of the area of 75 to 76, should be a total stop for that area. Right, we open in the market, you look at volume value and monitor the trade. So if you guys have any questions, you could post it there on how we trade strategies and stuff. Again, be careful. So you can check, we want our stops beyond the overnight low and have relative stops based on volatility for the high. In case of breakout, one would be for the test of the node, secondary would be one deviation. We're not looking for 0.5 deviation, which was the 55 to 53 area. May come into play today, but we want to be patient a bit, as we were patient yesterday with the 41, and wait for price action, volume, value, and time to align before we enter that particular trade. And those would be two contract trade. Now make sure you don't over leverage. I might actually do a small video on how we actually look to set up trades and what is our risk tolerance and stuff like that. You can see a breakout to the downside should be coming. You have delta dropping off, so this should be your target here. Now it will be reflected here because this mouse is in trouble. So again, the inflection point we've been speaking about since last week, that 53.30 is something that's very valid. And I don't particularly use RTH value areas. I use swing value. So to actually tell me, especially in high volatility situations, of where we're looking to enter and exit trades. You can see that 90 coming up as potential value lock points in the market. This is a 5-minute chart, remember that. Change the ES to 5 minutes for you guys. Simple SNR trades could work here too on the volume, but too early in the day for me to activate, think about trading that. Again, our entries are at 41s and 44s. This is average entry with logical exits, having reasonable risk in the market. The Twitter handle is level 2 trading at level 2 trading. I opened it last night. This Twitter, not too much of a Twitter person actually myself. Right, now you can see we have active value we could lean on, active POC, active value we can lean on to see value. Click into the smaller side, so 44 would be the structure. We have structure here, so just trade off of what you see. And this is the inflection point. More or less is, if you're using here as support, make sure that your stops are very tight, because you may get knocked out very quickly at this hour also. So I wouldn't be using here for support personally at all. And there would have been my closeout for the trade at 5300. Make some easy money, as we say. That was probably one of the easiest trades we have. My live just got filled. Let me just make sure my live got filled. Yep, it filled. Take the thing on that logical point is 52.90. Just want to snipe the market this morning. Sniping is very good. if you know what you're doing and you can handle taking losses. It's all about measured risk. Once you can measure your risk and you can not over leverage. Mm. Made a quick 750 this morning. Got 25 off, 250 off the first contract and 50 off the second. That is a simple trade where we were looking to lean, where we really look at it on Twitter. We put our stops at 75, we put our entry, we saw the test, got it filled back on the open, looking for the drop to the downside. Right now we are at oh I guys, just one like, share, comment. Don't know if I'll be here next week. Bring some stress back into my life. Those guys cannot handle that particular job. That particular job is what we call a pain in the nene. I'm not gonna tweet out that. See what the ES is doing. We have a drop volume. Where is my data indicators? It will be on the volatility. It's not on the volatility volume base. So value. Right. Watch that spike what it closes. So the expectation is for seek lower prices. Cheap trade there. If you see the opportunity and you're playing against the breakout, cheap trade is at 59 and stops right above those recent highs, but very unlikely that we're gonna get that chance before 10 a.m. Eastern. So and again, using a histogram, a delta histogram is different from using a cumulative delta. I've learned again each one of the guys. I think it's just what helps me in trading. And that's it, 53 there. I would have maybe I got check up all right there, so don't need to stress yourself out if you're early in the market and get some early profits. Logical place to exit at 53. Didn't quite hit the 52.90, which would have been your max. Don't need to chase trades. Alright, this is where the investigation starts into what we're looking at. Volume profile is last swing high, swing low. Where is the entry looking for? The lean on at 38. As a value entry is. Again, this is the identified area at 50. Look at where my ranges are. Make sure swing low to swing high is the active, swing low to swing high, because my data is it online with this. That's not right. Beeper clock. Inside, not looking for this beeper here. Value low. That 50 I going to lean on. May take some extra risk and lean on 60s. So most of the price action happened prior to the open. I don't need to use that today. Along with that, close off most of our trades. And the other notification or FT stuff. Give it time, give it time. Let the fight happen. And then try to pick up on the trend. Popping a single 1.1 to 1, 6.5 on the live entry today. Locked in the POC. This is the active POC to your right. You can see where we are. Remember, the POC is a developing POC on this side. This close over here showed a lot of bearish signs. So let's see. You see how the profile is developing. It's not Gaussian at all. We already searched through most of the points. Probably looking for new value in the market. Let the market decide what it wants to do. And see if we could get play off one or the other. That is a 56 right there. You can see where we located higher deviation level 2. You can see collapsing on the overnight tighter range. Be very careful of where you're trading at what time it is. Because you may get that 10 a.m. full swing after all the guys they start loading. Let's see what could put on. It's 600,000 contracts, 250,000 contracts already. You can see volume to the upside, market does not react. Volume to the upside, market doesn't react properly. I just give you an indication on the momentum and the shift in momentum. Patience is a virtue. So why I don't want to be at this 55 level is simple. I do have an exit or a stop loss to set within my tolerance level, so that's why I was leaving it, let it act on its own and let time and price action define where it is want to be in the trade, where you want to, if you want to account for anything in the trade, meaning that what direction you need to go. So you're not seeing any direction, you're seeing a lot of coiling in the market. So the market is trying to define and figure out if we have a particular direction it wants to go. Forgot to check oil my data this morning, Friday. No, tomorrow is the earnings call. So trying to get into a good price. Bounce back up 2%. It's normal. $6.35 is a reasonable target on Tesla. I may look to add the Nasdaq to I don't think I'll be adding the Dow at all. I have to build out Nasdaq as yet. I have one guy who come in, he wants some levels for Nasdaq for distribution, so if I do get time, I may build out that over the next couple of weeks if I don't go on that job it's in Aruba, so see that jump there. One day at a time. Only have one contract that you're gonna be following. And make sure you have enough width. Could put the NDP up here. Leave up. Show the value. See value good. Again, cricket. Could make a case for going low. I guess where our stops need to be. 46, 54. Nope, does not fit. Now this is what we need to cover. We have a possible deviation inflection point to the upside. If it's a single, we want to be more than 1-to-1 for the next structure play. You see we get any bounce off a price action telling us yes. VWAP telling us yes. So this is mentally waiting this in mind. What is the level I'm looking at? Why I'm looking at that? We in the level here. We 9 minutes away. We have POC supported, structure support, deviation, point of control, a lot more pull to the upside, and how you're defining your risk. Single, right? So 1, 2, 3, 4. That is 4.4. There's a single. We are use it as a lean pop. At 56. See where our stops are. You're looking for that 10 a.m. Run to the downside, push it. 55 to 56 should be a level you're looking at. Just probably kept a little bit too long, but that is the game of trading. So mentally you have to be running through your mind, locate where your stops are, pull this for clarity, you know exactly where we want to trade off of this. So we'll be able to show the stop easily. Right. So you're looking at 56 entry. We're hoping for this to lock in a little bit, let value be up to the upside. 55 to 56 is your kill zone here. Medium kill zone exact to the tick entry is 53s. Take a look at 53, 55 is the entry. I'm just going to place that order in. So I want to be able to trade point of control to value area high, value area low there. So the entry is 55. I'm going to actually put that into my system. Hold on. Alright, that's single working order place. Going to open that here. So you're looking for a 10 a.m. fill to the upside on the test of 55. Well, remember I am an hour above you guys, so I want to keep stops beyond value, which is 6.5 points at the moment. Now using VWAP POC value area high as support. So yes, it is value area high, point of control, VWAP as a support. Knowing where the location is 55 to 56. 56 would be maximum of the entry for the upside. I probably missed that. Nah, be patient, just be patient. So you're looking for 6 to 6.5 points off on either side. Because you're in the middle of the range. So it's about not being rash. Don't be rash in the market. If the move is made, so be it. Do not chase the trade unless you have very short stop, which I don't actually like to trade very short stops. Trading very short stops is that I have a bit more than 5 minutes to see if we could enter. Took a little bit to make, took a little too long to make decision on our end. Probably could have gotten on the retest. It's all about time and rotation. Didn't want to be too early on the rotation, on a time rotation. And we know we have hammer candles out here, so that's why we looking for just up to the downside, back to the upside. You know where reasonable ranges, where reasonable entries are, and we have structure right there, structure right there. I created structure there just now, and another reason is we have a boxy VPOC, boxy volume area, sorry, value area on the development value area side. That's probably about 5 seconds too late on a very good entry. But no worries, it's traded. Good board. The oil might be going up. Yep. And it's about setting reasonable targets and reasonable stops. You can see I traded one single on this because we see any hammer trade here. So, and where the VPOC was, VPOC is rising, the volume is still here. Didn't create much of a morning fee. first I get into a buy position. So for me it's about more about process. Once I could have my process, it's not about being early or late. I just have to make sure I go through my steps of analysis, see what I'm seeing, where I'm seeing what, and trade off at particular levels, know what risk level I, as you can see I trade on one contract here, where I normally would be trading two contracts, knowing what the risk level is, knowing what the stops are, and looking at the market in a clear way. Always have your mind clear on what you're trying to achieve. And with the trade idea, make sure the trade idea is valid, make sure your stops are
Order
valid.
filled.
You could hear just what filled. Patience, patience, patience. Always repeat that to yourself, keep talking to yourself. It is not being crazy, it's only when answers. So looking for 66.5 points off ahead of the retest, 2 minutes from the 10 a.m. So let's see what price action brings us here. Is a single contract. We got flipped on the POC. We are off VWAP, off value area high from yesterday. You can see where we're looking off value area high from yesterday, from the 53s to the 55s. 56 would have been the highest we want to enter at, because it would have given us that stop, which is the active value area low. So when you're looking for 66.5 points, I probably would be taking 6 points off of this, which is my actual trade setup for the retest of this high. Not looking for too much logically enter and exit trades. Make sure you do that, because if you're illogical, it's like Spock. Be logical. Trading is like a Star Trek character. And try to keep the emotions outside, although it's very difficult as a new trader. All of us goes through that. I rate myself as a normal guy trading out here, doing what I want, trading what I see. Trying to leverage on the market. Some knowledge, experience, and sometimes it's good to be lucky. I also follow a if then process.
Order filled.
Victory. Victory is sweet. Just made some profits there. Sweet. Don't need to stress out our lives. You see where we bought. We use knowledge, skill, and patience to achieve a profitable morning. Don't need a lot more than that. Now we can see the pop here. Now is where we will have guys chasing the market. Don't be chasing the market. Do not chase the breakout. If you chase the breakout, all well and good for you if you get through. Not good for you if you didn't get through. Just trade logically. Now you see me looking at this side here, watching to see what the volume build is. If you get a pop the split or jump to the upside, we may be in business to get some selling done to the upside. If you're on two contracts, I wouldn't advise you be trading two contracts on that level, because your potential reward is for the breakout and the breakout alone, and you could get slammed. Just want to see this VPOC build a bit more. Watch to see what the rejection candle looks like. It is now 10:02 on the East Coast. Made a one contract victory on this. Have a two contract victory on CL. CL should be popping. Yeah, CL should be popping right now. So here's where you might be able to get into that position. I wouldn't advise it. Right here at 06, and look for your exits right here at 58, and keep your risk reward low. Just gonna put that one in. Hold on. The buy would be 06, the tens, and yeah, you look at the risk only the small amount, not a lot. Short entry, small entries. You can afford to buy two contracts there. Give it a reasonable stops right there. That's what they're going at 15 points to contract. So that's you're looking at where the actual value to exit. Always go one tick below. If you're in the trade, you know, have a cheap enough trade you want to pop in there, no problem with that. You can see we starting to struggle. We're struggling at that high, so that decision we made. We know we have one setup to the downside, which is the 44. Monitor the market. If you have any question, you can pop it in if you need to. Again, it's trade what you see in the market. Trade lean on your particular areas that you know would have a lot of guys leaning on this double top, a triple top it might be. Yeah, I think this would be a triple top, a round triple. Know what you're trading, when you're trading, how you're trading it for your opportunities. Let's check all this on investment.com. Go at the technical numbers. Just keep an eye on Tesla falls tomorrow. I'm looking for that buying opportunity. Don't show me ads. Why are you showing me ads? Where's my chart? Alright. Right, you can see a liquidity pop there. You're actually seeing that liquidity pop setting up. Simple, simple, simple. Always keep life simple. Yeah, I don't want to go through this stress of going through that to wait for breakouts and stuff. Always profitable. I just don't like the stress. Sometimes I can handle it, sometimes I can't. I had a pretty good day yesterday. Reasonable start to the morning. 127, 141, 168. Extend price lines. Bye bye. Okay, so we're looking for the equal measurement to the outside. How that is related to this side here. is like this. So you're looking at the possibilities in the market. What is the plausible trade? What is the possible trades? Looking to get in and out by London close. We know we have some structure in our way still. There is structure here. So we're looking at structure. So we choose this structure because it's closer to our 1 deviation area. 69 to 72 creates an average entry of 71.5. You want to make sure you can. This is why I don't want to be leaning on either one right now at this point. Looking at what we have data release wise this morning. Because you guys doing pretty well. And you can see the oil popped into the area we were looking at. Look at what our data releases will be for the day. Whoa, CB looks pretty good. That is the reason for the pop. Now we would not have been able to tell what the numbers would be. So I was expecting 128, about 132. So confidence in the market is pretty good. So no worries there. That would give me why the pop would happen there. See hammer delta push to the upside, market wanted to go up, it shows our position, but he got out. Didn't want to have anything to do because we know data was coming out at 11 a.m. or 10 a.m. Every data was bad. That wouldn't have been good for us. Take as minimum amount of risk as possible. Just look for what normally happens. So we have two cells, one located at 72, one located at 69, 69, sorry, 79. Our stops are at 76, which is above the opening range from Monday. 15-minute chart. Don't know what's wrong with the mouse. You see above the opening range. Yeah. Oh, I need to post something on top of this morning. Sorry, forgot to post it. By the time that will come out there, time to see. Right, what I'm looking at is how do I explain that? Let's see if they upload it.
Good morning. Mixed signals overnight. The FOMC meeting starts today, and new focus on earnings. Let's see what we're looking at. Good morning, fellow traders and friends. It's time for the market forecast, Tuesday, January the 28th. I'm John Hoagland. As always, thanks for trusting us with your time. JD is going to have a report coming up here very shortly. We're going to take a look at these markets, see what kind of context we can put over them to put us in the right direction here. As always, we like to start with the economic numbers due out today. The 7:30 this morning, the durable goods numbers came out with somewhat mixed numbers, but all of the last numbers were revised lower, so a little bit of a down view, if you will, on the durable goods this morning. 9 o'clock this morning, consumer confidence comes out. Of course, I'm always talking in Central Time. And the FOMC meeting begins. In other news today, the coronavirus case continues to rise. The number of cases continues to rise. Although there seems to be a little bit of light coming from that, the recovery rate is also rising. It's looking like this may not be as lethal as possibly the SARS virus. FOMC meeting starts today, not expected to change rates. U.S. equities are set to open higher with fresh information. Yes, there's something else to look at now in the form of earnings. So we're going to be looking at those this morning. Just a few that came out already: 3M, HCA, Harley-Davidson, Lockheed Martin, Pfizer, United Technology, and Xerox. After the close today, AMD, Apple, and Stryker, just to name a few. Hopefully, if you're in the markets already, you're doing well. Good morning, Alan O'Neill, Brendan, Jim, Level 2, Doe Trader. Good to see you back, Level 2. Make sure you like, share, comment, question, feedback, and heckling are always welcome. And don't forget to subscribe to our YouTube channel and look for the notifications for when we go live. Good morning, Keith. Good to see you. All right, without further ado, let's dive into the charts, see what kind of context we can come up with for us this morning, as always, starting with the daily in crude. It's a $13 move, high to low, in a pretty short period of time. It was asked yesterday, I think in the forecast or in the recap, one or the other, we thought the market might be getting a little bit too cheap. And you know, when I set the weekly kickoff levels, I left the weekly kickoff high pretty far away. Just a pretty straight move to the downside. So it's kind of a hint of what I think is when the weekly kickoff level is close near the bottom and far away near the top.
Alright, we got a punch to the upside. Look for that. CL is moving, it should be moving in lockstep with it. There's your lockstep move, and there would have been your POC output. They're scalping, that's your scalp move. And just remove it. Logical entry, logical exit. Push, take the risk. If you got in the trade up to 10, it would have been a reasonable trade for you to take 1.5 to 1 sniper. You know, the market. You would have had to put your stops at 90. Then I'll give you 20 points. You got in live. You got a 1 to 1. Then the 38 to 40 is going to be a target. So you got 1.5 to 1. Which is a reasonably easy trade to take. I didn't gut fill myself, so boo-hoo. Alright, we targeted in that test. Now, I was talking about gaps just now. You can see I posted the question. This is why I'm talking about the gap. So, go to a 15-minute chart. So now I have those things set up on my live. That or whatever. Right. Let's talk about this, which is gaps and gap fills. This is a big gap, well, reasonably big gap based on what the volatility was over the past month or so. Reasonably big gap from one area to the next. You can see where we close, where we open. That big gap there. Want to know what is the odds of that filling? I don't have that particular data, meaning if the gap gonna fill up to that 80 level. And you can see why I have my side identified using trying to use as small a risk as possible, because we haven't been into this gap for a while, so we're trying to use the um, deviation 20% calculation of implied deviation as my stop. So you can see 7 7 4 11 could go up to 77 on the stop. We're trying to keep that a lot tighter this morning on the sell side because we are against momentum here. So you're back to the if then situation. Let's make sure we're going still on. This mouse. Last night I was actually making a trade plan that we had. My roosters they like to go mad on the evening. It is part of Caribbean living. Living in the Caribbean is just living in the Caribbean. Let's see if we could get filled on that 69 flat. Test off the node. Right here. Want to see that node tested right there. Then wasn't interested here. Want to interest here. I was interested in here as the midpoint of the open. Just close right there. As one entry, and our secondaries are at. We'll try to get the exact number because it's need exposure. Deviation is at 71.75. Make sure I just have mines for deviations one tick ahead on my deviation entries for one deviation. If you held on, it was a pretty good trade, dude. Make sure you don't take too much risk if you're in multiple contracts. Ooh, construction started up, so make sure you know what your location is, where you're located, where your stops are located, how wide you could go on your stops. I always believe in wider stops, less contracts. Make sure I have a proper kill zone, proper trade idea, proper trade plan, and use what you have to your advantage, as we did this morning, buying off the 55s. You can see touch, bang bang bang. You had a lot looking for you to be able on that side, to be honest. So now we're just gonna try to fade the move in the market, see if we may get lucky. Don't really want to be in 68, sorry. Switch back to our 5-minute chart. $68 will assume it too much risk in the market, right? So those are our two cells sitting right there. I just posted something. Okay. Have my stuff set up as yet. I wouldn't put the average entry, I'll put the exact entry as we're going to be /ES. Look in order. I don't think they might be able to understand what that is. secondary is where we look into we do get filled on the secondaries. We want secondaries to be the home run trade. If we do get filled in the area and the trade does work up, we'll be following the point of control. Galactic. So this is mostly for my records also. I normally organize it back after. When the week is over, I always date my stuff. I know what date it is when I check in properties.
Order filled.
Right. So I just got it filled at well, that'll be 10:24. 24. Pictures and located, but we know we got filled. Go to add a pic. Where's my stuff? Where did you go? Pic. Oh. Where's my CL? Let me show you. Oh. So we're in primary, secondary. Now we're leaning on the test. We want to get filled on in secondary also.
Order filled.
Filled to be at 70.5. That's both our entries there. We know we just be running on breakouts. Right. Easy way to handle this if you're getting breakout against is where your value high, you're looking for return the value high. This is what you call live managing. Look at value area high, make sure track the value area high if you don't get breakout against. You know where the 72 was, we know exactly why we traded the bridging contract. Where it is now is to have one at risk, one at break even, and roll stops once you can get out of it. So your active should be 64, sorry. I'm gonna just make my adjustments on my system. Hold on. You could get run over, but so be it. Alright. Because you can see this as a key point here, as we were looking at right there. If we get the kick point against it right there, that's why we didn't want to trade off of this particular area front here. We traded off of this area and traded off of deviation. Anything beyond that, we in the gap still. Our stops are in the gap, so we know where we located, what we located at, and manage through that. And manage where we want to close up a single trade or a double. Logical exits on the trade. So this is the primary. We're looking just for 169 entry to raise our entry and then manage through the trade. if we are successful, if we don't get stopped out. It is now 11:28. We have momentum, and you can see the punch to the upside right here. High volume, no punch to the upside means be very careful if you're trading and you're trying to import live. Trying to see if we have any selling power here. Which is, let's see where it is. Close off this. I would have that on here. What was the open? I'll go to historical data. Right, find the open for the 26. Right, open and high right there. So we know exactly where we located in the market. See how my stocks are doing this morning. Pretty well. You can see a pop to the upside. Well done. If you got in that trade, like yourself on your oil. You can actually see that oil, that trade build like that. You can see the CL build like that. Poof, to the upside. Catch value here, swing value here, look. 5306. Push to the upside. Know exactly where you're looking at. We have some options in the running, so yeah, being very coy about that. Let's see how the attack on the gap. Attack on the gap breaks. Well played. That's a lot of momentum there. I profited in 20 days so far, so I'm not too worried about that. 15-minute chart. So you can see where we have identified areas, ranges here. See that gap fill? We have a working order already sitting outside on that gap fill. Right here, want to see that gap fill right there is the gap fill we're looking at. We have two contracts sitting right outside here at 20. You know, it stops at 30 points behind that. Want to see the momentum push to the upside, fill that gap, come back down. 15 to 20 is the kill zone. Right here is your kill zone. If you're long in the market and you still have contracts, once you see that break there, you should have a lot of free running to do. Looking for this nodal value here. You can see why we have test, limit, test, push, push, push to the upside. If you're not in it, do not chase the trade. Do not chase the trade. If you intend to chase that trade, when you have one entry which is 53.70 and take nothing more than 20 ticks or risk on this trade. Right here you can see why you would want to enter. Always have a plan if you see something and you want to see if you can get a good RR. Right. We can not place this here because our time is it. I want to see that return down here. I want to actually see the return come back to 53.50 and buy off the 53.55 level. Don't mind saying, I personally don't trade breakouts. Oil and money are single. I only want to see that value trade. Know where my stops are, know where we're located. Buy the momentum. The momentum is here, right there. because being late is like being having a loss on the board. You know exactly which way that stop landed right there at that 53.25 level. Why? What the hell? Why did all that appear? Oh, right. Not working order to the upside. That is 420, 53.20, trying to bridge that gap at 55 test and push to the upside. On the buy side, we know exactly where we want to sell if the gap doesn't fill. Right now, you have this test, just the test of below. So technically, the gap isn't filled. You want to see that gap fill here. You want to see what your failure point is, where you're gonna be. Trade small, trade smart. Bye bye. This is only a scalping position. I wouldn't even advise it. That is the test of this empty. And just probably take a probably a cheater one scalp or a quarter one scalp. And let's say 55s and 70. That's 15 points. You might need cheater one on that for me to take that risk there. I don't want to be able to take that risk there. The ES might fail against us with the momentum pushing to the high side. Be very careful of how we are acting on this market. I'm using logical risk into the market. If the gap fill does come, you know exactly what we have to tend to implement. More likely to get it filled on the oil than the ES. More or less long on the 2 10 hour opinion, 1% move also. So the momentum isn't that strong versus oil. So you don't want to be in this area and enter in a trade. Not in our opinion. Would never chase a trade. Never ever chase a trade. It's been there, done that. Highly unlikely that it will work out. Wait for the pullback, then buy into it. There we go. I have games to do. Damn. It looks like a gap fill. I won't be pulling my stuff. I let this run. These are the active positions. Selling the 72s, 70s. If you have average of 70, you're good. Stops at 76 to 77. I have enough leverage to push back my stop to 77. This is, we're trying to be tight. This will be a clean push to the downside. Doesn't look like we'll be getting the clean push. So this is not moving your stop backwards. This is making sure that you had a high enough range for your trade and it fits into why are you doing that? Just not move my actual stops on my side. So that'll put my at average entry, average exits. That's a breakout here. And that's 6.5 points as we were talking about average. We do get filled. And we're looking to get filled on the oil on either 53.55 buys with stop at 53.25 to 50. I just want to be on the 25 beyond the point of control. And 1-to-1 targets on 1.1 to 5. Do not trade in this area. You will be locked up in this area because that is the gap fill to the low. Not a place you want to be, and we're looking to sell 2 contracts of the 20, which is the obvious gap fill from close, and reflects off what we were speaking about gap fills. So hope you guys have learned some stuff this morning. Trade small, trade smart. Gonna play my video games. I do love my video game, but not a lot happening. I do just play video games. So hope you guys trade small, trade smart. Hope you gain some ideas and some insight into the market. Don't do this for money. Just do this for sharing and recording my stuff. Okay guys, bye. Monitor this and goes up. Cool. Alright, bye. Dope.